Hey everybody, are AI and big tech valuations getting out of hand? Let's dive right in. I'm going to pull up a slide here today. So what we're looking at here, let's compare the dot-com bubble to what's going on today. From both sides, we're looking at the NASDAQ 100. The NASDAQ, of course, is known for invested in big tech and growth-oriented stocks. The light blue is what the dot-com bubble did. And you can see the inflection point there where stock prices really took off in the late 90s, early 2000s. And we know what happened next. So to compare it to today, the dark blue line, we haven't seen nearly the climb that we saw during the dot-com bubble. So that's a little bit comforting maybe. How do we compare that with earnings? And we really should be looking at this. So the next slide, the left-hand side is the dot-com bubble, and the light blue line being stock prices. The dark blue line here, this is earnings. What did earnings do? Because if earnings are growing, stock prices should grow. You can see how wide the gap was on that side versus the right-hand side where we are today. So same thing, light blue is going to be what the stock prices are doing and have done. The dark blue is earnings. And we see look how steep that earnings climb is relative to the other side there. Companies are profitable. They're growing their profits. And again, in turn, if profits are growing, you would expect the value of the company itself to grow too. Now, the reality about AI is when you hear about AI revenue is a lot lower than what stocks are showing us, most AI companies are not even publicly traded to this point. So if it's not publicly traded, number one, it's not in our portfolio. We don't have exposure to it. You probably don't either. But it's really a black box. We don't know what the fundamentals look like. We don't know what the balance sheet looks like. We don't know what the earnings look like. They don't have to disclose any of that. So we might see these things IPO down the road, and then we're looking at valuation issues purely related to AI. The companies in the NASDAQ that are in the S&P 500 that we have exposure to, they generate revenue from lots of different things. So it's not like everything's hinging on, is AI actually profitable directly itself? So that gives us some protection there. Now, what else are we looking at today? A couple things out of Washington. Government shutdown, probably going to be over by the time you watch this. It looks like, I hope, I think. Also, the Supreme Court is deciding on President Trump's tariffs that he implemented early April. We'll see what happens there. It's going to be really interesting to follow. There is a betting market on this, and it's looking pretty slim at this point that these tariffs are upheld. So we'll see how that all shakes out. But in the big picture, we're always looking at the Fed. So this is very much the WTF stock market right now. WTF, watch the Fed. That's really going to be what drives everything. And the meeting a couple weeks ago gave investors pause because Chairman Powell came out and said, even a cut in December is not a foregone conclusion. The market's pricing in far less in rate cuts than it had been previously. And when we're at this point, talked about this last quarter, when good market news comes out, good economic news comes out, and the market reacts negatively, and the other way around, it's really, really tough to forecast what's going to happen in the short term. And it always is. But now it seems to be even cloudier. But it makes a lot of sense to us. Let's go back to tech and earnings and valuations. It makes a lot of sense to us to make sure there's an element of stock selection in the portfolio. It was really nice to ride those passive index funds all the way up when the whole market was kind of climbing together. But as we like to say, the best time to fix the roof is when the sun is shining. So things are pretty good right now. Let's make sure we've got responsible managers in the portfolio that they're picking the right stocks that don't have us overly exposed to any potential valuation problems. But hey, that's it for today. Let us know if you have any thoughts, questions. As always, we're here to help. Thank you.